Jason has a 25-year career as a financial advisor, during which he interviewed nearly 1,000 people about their money. In addition to being a fellow of both the Chartered Institute of Securities and Investment and the Personal Finance Society, he's a personal finance columnist for the FT and author of 5 personal finance and self-improvement books. Drawing on his latest academic research and real-life experience, today he'll be explaining how employers can help their staff maximize their financial well-being so they worry less about money and live life to the full. Please welcome Jason Butler.
Thanks, Mary. A couple of years ago, I had a slight ache in one of my molars. And like you do, I ignored it. And it ached a bit more, and I ignored it, and I thought, I'll wait till the checkup. My daughter said, "Dad, I've made your favourite fruit cake. Would you like a piece?" And obviously, it's got fruit in it, part of your 5 a day. So I said yes. I bit into a piece of the cake, and there must have been a piece of gravel, because that's what it felt like. My molar that was giving me the jip completely disintegrated. And apart from saying, "Core blimey, I think that's painful," I got straight on the phone to one of my very good friends. He's a dentist. He's actually my dentist. He was my friend first, then my dentist. Try it the other way around. Anyway, I said, "Chris, you've got to help me. My tooth has collapsed." He said, "Get yourself up here. I'll clear my thing and I'll do a temporary repair." So I got into the surgery, and he said, "Right, well, what's gone on then?" And that's just when he had his hands in my mouth. Why do they do that? He said, "What on earth have you done here?" I said, "This is just like completely obliterated." He said, "But you're in luck." He said, "I'm a professional and I think I can rebuild it." I said, "Great." He said, "I'll have to patch it up temporarily so you're not in pain, and you need to come back next week." Oh, you know, he went right up my birthday card list. Now, the reason I tell you that story is that AXA Group a few years ago did a study, and they found that 1 in 7 people would rather undergo a major dental procedure than deal with their personal finances. And in fact, 26% of that same cohort said that the thought of dealing with their money absolutely terrified them. Not worried or concerned, terrified them. UCL did some research amongst 15,000 people 2 years ago. And they found that people were 7 times more likely to tell a complete stranger the number of sexual partners they had had and whether or not they had ever contracted a sexually transmitted disease rather than tell someone how much they earn. Now, this is the reason. For most people, money is pain. Not everyone. I know you're all very intelligent here, and perhaps your employees are to the right-hand side of the curve. But we don't make any decisions about money from logic. It's all done from emotion. And the pain comes from a whole host of places. Now, for most people, money is overwhelming. I mean, you know, we've all felt like that lady there sitting in the tumble dryer. And that's how a lot of members, a lot of employees feel. And it's like something they can put off. They can just push it down the road. It's not something they need to deal with today. And when anything's overwhelming, you switch off from it. You don't engage with it. And that's why people would rather go to the dentist, even if it's unpleasant. Another reason that they don't deal with it is that money is an abstract for most people. I mean, we certainly know that no one thinks of themselves as getting old, do they? No one thinks that they're going to need money in their old age. No one thinks they're going to live beyond the average. We know there's a 50% chance of a 45-year-old living to about 95. So that means a lot of people that right-hand side. But the average person can't understand that. And the reason is because we've got these two personalities, as we know. We've got the doer who wants it now, self-interested, myopic, give it to me. And we've got the rational planner who basically wants to take a long-term view, do what's in your best interests, think it through. And that's the problem everyone has. And if you add on the fact that people have digital distraction, They have other things. Once you overload people cognitively and you give them an abstract subject, they will turn off. Number phobia. Now, shameless plug for my last book, Money Moments. I tell the story about I was written off at maths at school, and that was mainly because the teachers were useless. And my learning style was different from theirs. So I grew up thinking I had no idea about numbers. And I took myself off to night school and rewrote the script. And this is a big issue for lots of people. The numeracy strategy and the FCA recently identified that just under half the population, working population in the UK, do not have functional mathematical financial literacy. They asked them 3 questions, one about inflation, one about compound interest, and one about saving. And less than half, just under half, couldn't get those answers to those basic questions right. So when you've got people who've got a number phobia, we've all heard it. I'm no good at maths. I'm no good with numbers. Oh, that's not my area. And so you get people who check out. And we have to understand this. If you're talking about numbers, if you're talking about reason, you're probably not going to get your people on side. If you talk about what matters to people and connect with them in terms of the emotional benefits, who doesn't want to feel in control of their money? Who doesn't want to feel that they can cope with shocks? Who doesn't want to feel that they can have great holidays? Now, this is another area. The emotions that we all have from sales promotions, from the whole of society, the marketing machine that tells us that we're not worthy unless we buy stuff, that we don't actually have any value unless we've got more than the guy next door. Now, we know that research studies show us that basically we would rather have a lower income, but higher than the bloke next door or our colleague, than we would rather have the higher income but find out that we're the lowest paid in the firm. Where's the sense in that? But the whole thing, as I say to my wife, look, love her to death, been married 24 years, never a crossword. Mostly married here, are you? Yeah. She's always right, I'm always wrong. I said, darling, the fact that you've gone and bought a jacket which was up for £300 that you've paid £150 for does not mean you have saved £150. You have spent £150, and what the sales promotion says has got nothing to do with it. And again, in my book, I tell the story, we went to buy a mattress. She said, look, there's one here on sale for £1,000, reduced from £2,000. I said, it's rubbish, it's not reduced from £2,000. I said, I can prove to you that this is a £1,000 mattress, and that's what you've got to think of. She said, well, how are you going to prove that? I said, watch me. As they are always in these bed places, which I've subsequently found out, there are people hovering, otherwise known as sales assistants. The sales assistant comes over and I said, excuse me, how many of these beds have you sold at £2,000 in the last 6 months? She looked cagey. I said, I want the truth. She said, well, I haven't personally sold any. I said, how many of you sold at 1,000? She said, oh, I sold loads, it's our bestseller. So I said to my wife, there's no such thing as a sale. But this is what we're competing against. People who are being told this is an urgent thing that you must have. You're saving money, but you're not, are you? Obviously, for most of you here, this is the runaround. This is the works pool car. As my wife said, it's very impractical. Now, here's the point. You're competing with materialism, aren't we? With what? Why would anyone buy a car like that? My friend was going to buy a Ferrari recently. I say that just to make it, I know one person who's got some money. But he did. He said, come to me, because Colchester, I live in Suffolk, and he said, come to me, you're near there, aren't you? Come with me to the garage. I said, well, why is that? Can't you do it spending on your own? He said, no, I need you because you're wise and sensible and you'll hold me back. And they lent him this car, £250,000 car for the weekend. They don't know how he drives. We got in this car, and I'm telling you, I've felt more comfortable in a go-kart before. So believe you me. But this is the thing. Here's the question. If your employees were the only people ever in the world, and they could get over the loneliness, would they still drive the same car? Would they still wear the same clothes? Would they still eat out? And assuming everything worked, of course, they wouldn't, would they? Because they're doing it to please other people. So again, this is a big thing for you to think about peer comparison, but we need to move that on to the whole money engagement story. This really gets me. People work like a dog, never see their family, let their health deteriorate to earn enough money to then go on a holiday for 2 weeks so they can keep checking their emails. This is the single biggest con known to man, that you need to go away to some lovely place which has got some strange, I don't know what this thing is here. I have to see my marketing lady, she's useless. No, I'm joking. I don't know what this is, but she said it would be a talking point. But this idea that we can live a holiday every day if we're in control. We can live a holiday every day. We don't need to wait for this once in a year, twice in a year, where we're constantly distracted. If we actually look at work as a wonderful thing, I do a talk called Making Work Optional. It's the single biggest talk that people love. There's parts 1 and parts 2. I'm thinking about doing 3 and 4. The big house, right? Let me just say to you, other than the people who live in London, right? A house is not an investment, right? Other than the people who live in London. It's a big millstone around your neck, and people get drawn into buying the biggest possible house they can afford, and all they own is a mortgage. All they own is a mortgage. Now, I know there's some issues with housing, but helping people make the decision between buying and renting, sometimes it's not right to buy because it restricts your ability to be flexible. And if you're renting properties, buying properties to rent, it's a business. And as I said to a group of millennials the other day, I said, look, I don't want to be condescending. I like to think I'm quite young looking for my age, but I am nearly 50. I said, and I have seen 15% interest rates coming up from 10. I've seen a property crash where I lost 20,000 quid on my first property. How do you do that in London? And I've seen stock market crashes of 30, 40, 50%. So a lot of young people haven't seen those events. And if they don't have a good start to their financial journey, then they are really going to be affected. So what happens is, you get this victim mentality. That when people feel all these things are conspired against them, I can't afford a house, I can't earn enough money, I can't save, I can't join the pension, I'm buggered, technical term. So they think that they need a miracle. And they think the miracle is the benefits department. But it doesn't need to be like that. So a couple of thoughts here. Now look, I've started doing yoga 3 years ago. I know it's a middle-age thing, midlife crisis. I can't do what that young lady's doing. I don't think many people could. It's all right, Laura, keep it clean. We were talking about it earlier. We aren't going to do a demonstration of this, so don't get worried, any of you people who are a little bit worried about the body stuff. But here's the point. I can do a lot more than I did 3 years ago, and it's not about anyone else. It's about, am I making progress, not have I got perfection. Yes, I can do all the balancing stuff and all that, but it bloody well kills me. So the key for individuals is to try and get them thinking differently and reframe the whole thought here. So rather than thinking about money comes from my employer, what they've got to do is start thinking about the human capital. When I say to young people, hands up here who's a multimillionaire not as a result of inheritance or winning the lottery, no one puts their hands up. When I explain to them that £40,000 a year over 40 years, rising at 3% a year, is £3.1 million. Now who's a multimillionaire? The question is, how much of that money will you keep and how much of it will you blow? That's it. How much of it? And it's not a river coming in and going out. It's a spring. So therefore, if it's a spring, you need to nurture it. So the best investment you can ever make, particularly if you're under 45 and even if you're older, is to invest in yourself, improve your skills, improve your employability. It may not be putting money in a cash ISA or even repaying your mortgage that quickly. Budgeting, right? When I ask people, hands up here whose budgets? Hands up in this room who's got a personal budget? Right, okay, fine. About 50% of you. When I ask that to people under the age of 35, less than 10% of the room puts their hand up. When I say how many of you actually follow it, no one puts their hand up. Because budgets are for breaking, aren't they? The government tells us that, right? And the reason why people don't like budgeting is because they feel it's constricting and I can't have what I want. As you can see, I was budgeting when I bought this jacket. I like to just walk the talk. But the point about budgeting, we need to change the reference there. It's not about budgeting. It's about smart spending. Who doesn't like spending? Who does not like spending in this room? Please put your hands up. Thank God we got normal people. But here's the thing. I come up with this idea because I wanted to give younger people and older people who needed to mend their ways to think differently. There are 3 yous. There's the essential you, the basic you. There's the future you. And there's the fun you. Who likes the fun you? Yeah? Who doesn't like a bit of fun? Here's the point. You need 2 bank accounts. Bank account 1 is your old stodgy old bank. and your money goes out to the future you to repay bad debt and build up savings and pay your basic costs. Your bank too could be one of the challenger banks with one of these apps and a pre-charged debit card, and that's what you spend all your day-to-day fun stuff. But what you have to do is put some sort of limits on each of these. So I always suggest sort of 50, 20, 30 as a rough rule of thumb. And I'm writing more about this, and it'll be on my website soon. But that sort of concept, no one's ever been taught how to budget. No one's ever been taught how to smart spend. So changing the reference term is everything. Now, quickly, in the time I've got, what can we do? Let me just tell you now, there is no one killer solution for helping your employees get inspired, equipped, and encouraged to do good things with their money so that their financial well-being is better than it would have otherwise been. There is no one solution, and no one knows all the answers, despite what some people tell you. First thing, staff presentations. This is a crowd at my last one. As you see, very engaged. Staff presentations work in my experience, and I've been all around the country, you need what I call, you need the entertainment factor. You need a 30-minute section that gives them a lick of the lolly, if I can use that term, where you actually get them laughing and you get them understanding and they are engaging with the subject. So it's a pathway into other initiatives and other support that you as an employer may provide. It gets people excited. So the way I do them is I do 30 minutes, followed by 10-minute Q&A, and then you get what I call the real questions, the hangers-oners, the people that hang about, looking at their shoes and all this business. Can I ask you a question? And normally they're looking for a 15-page report. But the other way that works is having money workshops. Now, the problem with money workshops, so just go back to the staff presentations, they are actually very effective if you do them in one location and you live stream them to multiple sites, which give the people, say Facebook Live, give the staff an ability to actually interact with the speaker, and that's very, very cost effective, saves you having to go all around the country. But the other way that they work is these money workshops where you pay for a money trainer to come in and do more immersive stuff, where you get people doing things like how to create a budget and mental accounting and all fun stuff. But the problem with that is it's difficult to scale and it's more expensive to deliver. So I would start with the live events that get people excited. Digital wellbeing platform. Now, it seems like one a week is being launched to these, right? You go online, you do an assessment, like a blood pressure test. How well are you? You're buggered or whatever, you're really great. And basically, it gives you an action list of things you need to do, and then it keeps hounding you for the next year to get all the stuff done. And I spoke to one bloke, and he said, God, he said, that bloody app, I had to disable it. He said, I want to keep being reminded to do my will and put some money in the savings account. But I jest. A good digital wellbeing platform that's interlinked with the rest of your benefits and not some sort of standalone Cinderella can be a useful way of helping people make the smart decisions. Now, I just want to talk about money coaching because it's never talked about. People talk about financial advice, one-to-one advice, regulated advice. Most people do not need that most of the time. Some of the people, some of the time, and some people do really need it all the time because they're that useless, basically. But here's the point. Money coaching from properly qualified money coaches will help people unblock the problems that are stopping them from making smart decisions and empower the individual to be the master of their own destiny. It's not regulated in the same that regulated financial advice, and it doesn't involve products or doing things, but it's actually a better intervention for many people, particularly those who've got some issues and some legacy problems or some mental roadblocks. Really, really useful, and I don't see this being done enough, offered. And in fact, with the you can do £500 a year via salary sacrifice for this kind of help, any kind of financial advice. It doesn't have to be regulated. And if you do it by salary sacrifice, you're almost going to take off 40%, 30% of the cost for the individual, depending on if you give the employer's national insurance back. So money coaching could cost someone £100, £150 a year, could even come out of a flexi benefit situation, but could be the single biggest thing that helps those people who are really need the extra help. And a helpful benefits team. The reason I got these dogs is because they look pleased to see the person taking the picture. And staff have said to me, the benefit department are sometimes very busy people, and they are not always pleased to see staff. So just a little point there. And I would just sort of say to you that really what we need to do is think about it from the employee's point of view. Have we got a room or rooms that are like a counselling suite? I don't mean like you're going to be listening to the inside leg measurement. But have we got a nice, conducive environment? Have we got someone in the firm who is the financial well-being supremo, the champion, the person who, the mentor? I know you don't want everyone's problems, but, you need to champion it. And so I would just think carefully. It's not about benefits anymore. Your job is becoming really about well-being, of which pensions is merely one building block. Now, I am pleased to say that my friend Chris sorted my tooth out 2 years ago, and he said you'll get good 20 years out of it. And it's all sorted. But as far as I'm concerned, we can't be sure whether people are going to keep their own teeth. And there is a good chance I've got a pair, just in case, because I like to plan ahead. But here's the point. Even if your staff, your employees, end up with false teeth, if you really engage with this financial well-being to inspire, equip, and encourage them to do the right things with their money, not tell them, but cajole and encourage them, even if they end up with a set of these false teeth, at least, because they've been good with their money, they'll be laughing. And all I would say is if people are laughing, they're not crying, and they're happy staff. Thank you.